What's up, guys? Welcome back to my channel. In this video, I want to give you guys a quick update to the stock market, given that they are near all-time highs, and how I'm positioning myself over the next couple of weeks. Now, I'm going to go ahead and talk about some news first. Trump, over the weekend, he announced 30% tariffs on EU and Mexico starting August 1st, and the timing of this release is pretty interesting because it's after market close. He could have released it on Friday, on Thursday. He's been teasing tariffs on EU and Mexico over the past few weeks, and finally we got it, but it was over the weekend. So I'm thinking that Trump actually has the stock market on a leash. He doesn't want the stock market to drop, and he is releasing these news that he knows will shock the stock market over the weekend so that it can be digested. And then when the market finally opens on Monday, it seems like nothing has happened. So that's what I think my intention for him releasing news at specific time intervals is. But, this is following I believe 25 or 30% tariffs on Canada. So he said that he'll impose a 30% tariff on goods from the EU and Mexico that'll take effect August 1st. And Mexico has been helping me secure the border, but what they have done is not enough. And Trump said there will not be tariffs on goods from the EU if the 27-member bloc or companies decide to build or manufacture products within the United States. So seems like there's more negotiation going on with these tariffs. We'll see what that brings, but so far, I expect there going to be a little bit volatility in the next maybe Monday or Tuesday, but that's pretty much it. I think that the damage from this will be pretty muted, given that we've pretty much run up the entire way, even though Trump has been announcing tariffs on, South Korea, Japan, all these Asian countries, but so far the market has continued to pump higher and higher. So we'll see what this brings about, but my guess is the reaction will be pretty muted. Interestingly enough, I follow this account called Cheddar Flow. It gives you unusual options activity, and he's saying 8 million in bearish sweep orders hit in SPY December puts, signaling downside hedge or speculation. You can see that there's a lot of 2.3 million sweep orders for December, another 3.4, 2.4, and this tells me that, from now until the end of the year, there's going to be some sort of, big volatility events, but I don't think it's going to be next week or the week after. So, from my perspective, this isn't something to worry about if you're like a day trader or you're like a weekly swing trader, but this is something to keep note of. And I think that this could play out eventually over the next several months, right? And we also have earnings that are coming up starting July 14th. We have, for the week of July 14th, we have Netflix on Thursday. We have 3M on Friday. We have a bunch of bank earnings on Tuesday. So, earnings season is kicking off. And that tells me we haven't gotten a single pullback yet in the stock market. So that tells me that whatever pullback we get in the stock market will be quickly bought up, because I believe that the Magnificent Seven earnings like Apple, like Google, Oracle, Meta, Microsoft, Amazon, those will completely, you know, I wouldn't say blow up. I don't want to front run these earnings by saying it's going to blow out earnings, but I don't think there's any reason to be bearish on these mega cap tech earnings given how they are performing recently. And so I believe that whatever pullback we're going to be getting is going to be muted. Netflix is going to be an interesting one because it's usually a bellwether for the rest of the tech earnings, but I think it's likely that, Netflix could have a bearish reaction to earnings, even if they're good, right? Given how far it run up, that'll spark some sort of sell-off, but I think the mega cap tech earnings will eventually um, take the market a lot higher. So everyone's watching the 630, everyone's saying that it's a V-shaped recovery. Tom Lee's saying a lot of institutions are still bearish on the overall stock market, which got me thinking, if a lot of people are still bearish, they're still top calling here with a possible double top. it's likely the market could still continue to pump higher to like 630. You get a pullback 1 to 2% to like 615 to retest previous all-time highs and then pump even higher to 650. So, as much as I want to short the stock market right now, I can't be bearish because, if you look at SPY from a 4 hour time frame, still holding up above all the moving averages, the 50, the 100, the 200 on the 4 hour. The MACD is still bullish on the weekly time frame. It's still showing no signs of slowing down at all. See that the histogram is still completely green. We're gonna have to see how this plays out, but so far there's nothing to be worried about. Here is the Market Watch economic calendar. So this is something to pay attention to next week. On July 15th and the 16th, we get the CPI and PPI. This is going to be pretty, this is going to be the most watched um, data point over the next week because, this is going to be telling if inflation is coming back up or is it coming back down. But the interesting thing is this, right? People are expecting the CPI to come in at 2.7% versus 2.4% previously. So already they're expecting a higher CPI year over year, right? Even with the core CPI 0.3% forecast versus 0.1%. If the CPI comes in line or beats the median forecast, you can expect a stock market rally, right? Because already people are expecting a higher CPI for this month compared to um, last month. So we'll see how all that plays out. And my thoughts over the next few weeks. I want to point out that we have a 4 hour MACD bearish, and we have some bearish divergences that are forming on the 4 hour time frame. These bearish divergences could continue to form because they're still all above the moving averages, right? Unless we get a significant breakdown, let's say below the 50, and then tagging the 100, you can expect that the market will continue to climb higher. I'm seeing a lot of people just trying to short the top, calling it double top and whatnot. But, in this environment, I don't want to keep top calling, right? But interestingly enough, if you look at the daily time frame for ES, I'm watching this MACD very, very closely because it's starting to roll over, and we're forming this bearish divergence on the daily time frame for the MACD. We're also getting a near-term bearish divergence for the RSI. So if it does indeed roll over, that's something to watch out for. And then for NQ, we're already getting a bearish crossover for the MACD. So if we continue to climb, like lose the 9 EMA on the daily time frame and confirm this MACD, the bearish MACD cross, and then all bets are off. But like I mentioned to you, like there's a lot of bullish catalysts that are on the way, like tech earnings, with the tariffs that he's announcing, there can be like a few deals that are coming in over the next few weeks that could also, pump the market. And also CPI, I told you, another potential catalyst. If it comes in better than expected, then we can get another positive catalyst. So everything's entirely news driven nowadays, but I'm using these technicals as a reference, and I believe that the trend remains up until broken. So hope you guys enjoyed this video. Hope it helps you with your investing strategies and your portfolio. And if you have any questions or comments, leave them down in the comment section below, and I'll see you guys in the next video. Peace.